The tax system is not built for you to win unless you understand it. That is just the reality. I am a CPA. I've been working with and doing taxes for the last 15 years. And if there's something I know, and if the experience has taught me anything, is that the system basically just works against you unless you do the things that you need to do so that it works in your favor. It can go either way. So what I want to talk about today, the topic of my this discussion today, is just kind of evaluate this for you so you have an understanding, so you can educate yourself and find ways to have the system work for you. We're not talking about here doing any cheating. We're not talking about going over doing anything illegal. We're just talking about what is the system designed to do, how it works, and how you can get it to so that you're not overspending. We live in a society, we live in a country that we actually get incentives that, unlike other places, other countries that don't incentivize as much, here we do. So we live in a great country where we're allowed to have all these incentives and projections and things that we could do that can minimize what taxes we pay. Okay, most people here in America, they think that taxes is something that you just pay once a year, or that you calculate in April 15th, right? And this cannot be further from the truth. This is as a professional that has been doing this for a long time, I can tell you honestly and directly that when you wait till the last minute to get all these things done, that you're working out, that you're working through your all your expenses, all your income, all your financials, and you're scrambling around and you're running around like headless chickens, as we say, while at the same time getting surprised, and then just jumping off a cliff, and this is how the taxes, here we go. It's not the way it works, and this is what I'm referring to, that the system is designed for you not to win if this is how you're gonna handle the taxes. Okay, so if you end up overpaying, if you see that every year it's the same situation, it's not because you're doing necessarily anything wrong, right? It's just because you're not structuring yourself properly. Okay, I've had situations of clients that have come up to me that they just keep firing an accountant, right? Oh, my CPA, they just filed my taxes and they didn't do things correctly. So I'm not saying that all the CPAs are great. I'm not saying that that you should not, in some cases, fire your accountant. But I think one thing that you do need to evaluate is whether the structure that you have, it's what is causing the problem, or is the accountant, right? Or the CPA. Just to give an example, if your CPA does work in a proactive, if he wants to do some tax planning, some advisory, if they want to work out, if they want to, or they have the service so that they can continually during the year do some planning for you, but you're the one reluctant to do it, then the problem might be yourself, not the accountant, right? Because basically that's the whole idea here, the whole point about the taxes and how they're structured here in America is basically that, right? We're kind of used to thinking that, okay, it's April 15th, I don't have to worry about that till then. I can just go out during the year and do whatever I think is right, without actually consulting, without doing some analysis, without doing calculations. Then you have the house against you. It's like going to Vegas, the house is always going to win. Okay, so this is something that I see every year, especially in April. Okay, people are surprised what they owe. They're scrambling around, as I mentioned, and they think it's a mistake, right? And it's just basically the same setup every year, right? Oh, okay, yeah. So I did my taxes, I made a mistake, or the CPA is not working for me. I've heard this a lot. They don't do the right strategies. But the problem is not maybe that they don't know the strategies. The problem is the timing when these strategies are available to you. which is during the year. So here at Open CPA, what we like to do is just educate our clients into the benefits of doing this during the year instead of showing up in April and handing out paperwork and just kind of jumping off a cliff, as I mentioned. And it's like, here we go, these are my taxes, do some miracle. That's not how it works. Luckily, we do have options, but those options have to be done correctly. So you may wonder, why are people just not doing it? If it's so easy, if it's just simply doing it this way, that if I just change to more of a proactive approach, that I have so many more options. Well, if it was common knowledge, then maybe the system will be designed to your favor. But it's to some extent, it's the government does benefit from you not knowing these things, because then it happens with the overpayment, then it happens with all these issues, right? And then the one that is kind of if you overpay, then it's on you. Right, the government is not forcing you to overpay. It's just basically, it all comes down to you making the right choices for you as a business owner, as a high net worth individual, to do the things right, so that you take advantage of so many things, of so many options that are given to you, so that you don't have to do that. Okay, so the system is built on incentives, right? So it's not just you show up on April and say your accountant, I just happen to wake up today, I don't feel like paying taxes. Okay, that's not how it works. So there are opportunities presented to you, there are options, but you do have to follow certain things, right? It isn't random, right? So basically the system is designed to reward behaviors. What are these behaviors? Like, Julian, what do I need to do? Okay, so high level, what can I do? Investing, right? If the government, they see that you actually are doing some investments, that you're putting some money to work, that's the number one thing that you can do to kind of just put the system to work in your favor, right? Not overpay taxes, right? So it doesn't mean that every investment it's going to give you some tax benefit, but if you do it correctly, then that's one incentive that you can have to use to your advantage. Okay, so owning a business, right? So it's very popular here up from CPA. Some of our high net worth individuals, they go ahead and they purchase a rental property. Right? They create a business, right? Maybe they invest in a franchise, okay? Very popular with franchise, especially for those folks that have other careers, right? That maybe they have a full-time job. It's very popular that with the advantages that franchises have, where they have the setup already done for you, these are very popular, right? So owning a business is a very popular option, right? Hiring people, hiring your kids, hiring family, or hiring more, actually acquiring talent to help you. Those things those are incentives that are provided to you. Building assets. Right, that's a very popular one, right? So how do I build assets? So there's so many things that you could do, right? You can save, you can put on retirement, you can do more investment, right? The option I mentioned about real estate, that's a very popular. You can build equity, right? Build assets. So we live in a society where spending seems to be the thing, right? We have so many things thrown out at us. For things to spend on so easily, right? A new iPhone comes out every year. We get that urge maybe to just go ahead and buy a new iPhone every year, and all these things. Amazon is so easy to buy. Just get on the computer, click 3 buttons, and now you can have stuff shipped out to you the next day. So there's all these things, but building assets and investing and building up your wealth, it's those are the incentives that will benefit you with taxes, right? So the people who understand this don't avoid taxes, they align with the system. Okay, so you just do your adjustments the way you need to do it, so that you get the system to work for you. Okay. So why most people lose, right? So this is when you go to Vegas and you take a pack of cash and then you come back with debt, right? This is what happens, okay? So most payers, obviously, you earn income, you don't plan, you don't structure, you deal with taxes after the fact, right? So those are the kind of progressively how you see that you're basically set up for failure, basically, right? When failure means taxes, then that's kind of basically how you're just walking up to the edge of the cliff, and you have no choice but to jump, right? Speaking, in a metaphor. So every April, we're reacting, right? Instead of just kind of getting ahead and controlling our outcome. Because this is here, basically at Upfront CPA, what we do is we like you to take control of the situation, right? Because if you come in April, March, you show up, hey, here, my taxes. There is very little control to what basically you're exposed to, right? You're at that point, you're just reacting to the situation that you're in, right? So now you're in March, April. That's when taxes are due. That's when your tax forms need to be filed. You have no other choice but to comply, basically. Okay, but that's not the only option that you have, right? So as I mentioned earlier, talk to your CPA. Most CPAs now these days where you can take advantage of our knowledge, right? What most CPAs kind of we're on a daily basis every year, just sort of, especially during this time of year, we're kind of working through taxes, analyzing situations. It's if your CPA is not doing proactive work, maybe it's time to consider one that is actually that has the knowledge, has the experience, and has the will, right? Has the motivation to help you overcome that hurdle of just showing up last minute and just getting all this done, all these things done when there's very little that you have choices that you have available during that time, right? So. Let's talk about, what's the so-called invisible advantage, right? The difference between paying more or paying less, right? Which isn't luck. That's not, that's not something that just, grows out on trees, right? That it takes work. It does take strategy. It takes analysis. It takes calculation. Okay. It's not a matter of luck. If your neighbor next to you might make a similar amount of money in terms of they may own a similar business, in terms of revenue, you're looking at a similar, but, you may find out later that, because of working with a great CPA, they're able to create a structure where they're actually keeping a lot of their money instead of paying more to the IRS, when you're actually just kind of getting killed every year with all these amounts due. You're getting letters from the IRS with the unreported income and all these things, and then you may wonder, why is this happening? You think, that guy's just lucky. No, it's not. I'm gonna break it down to you. It has nothing to do with luck. It has everything to do with setting up a structure, with doing the right things that you can do, and taking advantage of the opportunities that are provided for you, right? So let's just kind of wrap those up, right? So it's timing, as I mentioned, right? Don't show up in that March, April. Just do a consultation during the year. Talk to your CPA. Hey, this is how much I got killed last year. I don't want to do this anymore. I know that there are options. I listened to Julian in his YouTube channel. He told me that if I do this proactively, I'm not gonna spend as much. Can you walk me through? Do you offer that? Right? If the answer is no, then we may have a problem. Okay, so structure, right? Do you have the structure? Because all these things happen when you're. For us, just to give you some background, right? Here in our firm, we set up a structure for our clients, right? We go through everything. Prior year taxes, right? That's kind of like the foundation. What did you pay? Why? What is from there is then we're first looking backwards, right, to see where you're coming from. Then we look at the present, okay, see where you're at the moment, what has changed from your prior year to the moment that we're talking, and then we look into the future, right? That's where we're gonna go make some changes. That's where we're gonna go get some strategies done. That's where we're gonna put some investments on your side. Is it retirement? Are there some opportunities there in terms of real estate that you can invest? Does a cost segregation study, is it gonna benefit you? Do you have the if you own some real estate, right? So does it make sense that am I able to take advantage of the short-term loophole, right? Or am I, do you have a real estate license that we can turn that into an active activity? So all these things we're gonna walk through with you, and then we're gonna look ahead and plan and use the strategies to invest, put some money, get you to where you want to be, where you're not overpaying, where you're not hassling at the end of the year, where you have everything, where you have the proper structure moving forward that benefits you and that it fits you and your business and your situation. Okay, so all of this is provided to you before year ends, right? So as much as anyone on TikTok or anyone that is just giving blanket advice will want to tell you, if you didn't do things prior to year end, there's so many, we can still do so many things. Well, take that with a grain of salt, because the reality is that most of that, it's either unlikely or probably not true. Okay, because the reality is that the moment that the year ends on January 1st, most of the benefits and opportunities and strategies available for you are gone. They expire. That's just expiry date. That's when if you go buy some fruit, that's when it goes bad, right? When it gets rotten, when you have to throw it away. So the timing, the timing is the structure, is the planning, is just getting things done when you have them available for you. Right, and it's like how I mentioned earlier, right? You can have you can have very similar people with very similar situation, owning like a very similar business, and then at the end of the day, one may be overpaying, killing them on taxes, while the other one is, first of all, with a nice structure, with a relationship with their CPA where they're already kind of working in sync, right? Where they're able to meet with them regularly, where they're talking about certain things that they could do, where they're moving things around, where they have the right type of, if it's a business, they have the right structure, they have the right tax categorization. If they're employing their kids, if you have opportunity to spend some money, maybe they're hiring the kids, they're walking through all these scenarios that are gonna help you and change the outcome of your situation, right? That's when you have, similar situations, very different outcome, right? This is exactly why. It's the planning, it's the structure, and it's the execution, okay? Just to give you some context into a real world situation, right? Let's say we have person A. Let's say we have Peter, right? Peter has a W-2, okay? Peter does no planning, right? And he files in April. Okay, and besides that, let's say Peter it's a high net worth individual, right? Has a ton of money, but it's not planning, right? So it's just basically going day by day. Decides to not worry about taxes until April or March, when he decides to either call his CPA, call an accountant, or worst case, decides to show up at an H&R Block and do his taxes, get that out of the way that way, right? So very, very bad situation, right? So then let's say we have person B. Let's say we have Adam, right? Adam has a very structured income, right? And when I say structure, I don't mean by accident. I mean he actively works to get a structure into his income, to structure it right, and kind of just regularly monitor it and have it on a structure plan in a way that works for him, right? Whether even if you have, let's say, if you're in a business, right, that is cycle, right? That goes through its up and downs. That's an even more of a place where you actually want to structure it, right? Because if you have that steady income, right, maybe you can count on how much you're going to have during the year. So you may have an idea of your head on the income that you have, on the cash that you have available, and all these things, how much you can invest, all these things, right? That you can just kind of basically work them on your head, right? But if you don't, if let's say you're in a cycle type of income where, let's say during the first quarter of the year is when you do real well, right? And after that, it kind of goes down and then it goes up again. That's when you want to plan, right? That's when you want to kind of go through your scenarios, right? Do I have enough cash after Q1 to do some investment, right? Just going back to that example, let's say Adam, he has a structured income, right? But let's say he doesn't. Let's say he actually is a realtor, right? And then in the first quarter of the year, it makes a killing, sells 10 houses or 20 houses when he regularly sells 25, right? So he was able to kind of put that big bulk during the first quarter of the year, right? And this is kind of an outlier, right? So what do? Do you decide to, now that you sold all these houses, you may have all this cash available to you, that you go ahead and spend it all? Or do you kind of do an analysis, right? You sit down with your CPA, you look at the market, right? You look at kind of some projections, with what I've sold so far, with the income that I have, do I have enough for the year, right? What happens if I don't sell another house, right? Do I have enough? Should I kind of just maybe put some money away for taxes? Should I, put someone on a 401k? Should I hire my kids? All of these things are the scenarios that you need to walk through, right? And how often do I do this? Quarterly, right? So you can meet every quarter. Usually the sweet spot is around a quarterly. You can maybe get away with doing it at least mid-year and at the end of the year, right? Those are, I would call them the bare minimums, right? That's when you're kind of around mid-year, what you've kind of done so far. You have you can project towards the other half of the year, and then at the end of the year, you kind of just go and reevaluate, right? But quarterly, it's the sweet spot when it comes to getting that structure that is gonna work for you, right? It allows you to get Adam, our person B, to make decisions ahead of time, right? So what does that come out? What is the conclusion of that? The conclusion is we have similar income, right? But very different situation, right? We saw Peter, right? Peter has has W-2, no planning, has no structure, his bill is gonna be X, his headache is gonna be off the roof around March, April. It's gonna be madness and chaotic. You may ask Peter in November, how much cash, is he able to invest? He's probably not going to know, or he's going to guess, because he doesn't have his ducks in a row. He doesn't know what he has. He's not planning, right? And then we have Adam, who's a structure, right? Even if it's in a cycle business, he's able to kind of just work through scenarios and do some projections, right? And have himself organized, right? And plans quarterly, meets with his CPA, they walk through some ideas, some of the things that they're working through. They're very similar people with very different outcomes, right? So, so what we need to do here is a shift, right? It's just basic instinct. If the system is kind of working that way, what do I need to do to work it for me? So it's very simple, right? Is you do a shift in your mentality, in taking the right steps to now get the system to work for you. Okay, so the biggest shift is just understanding this, right? It's just I always tell my clients, right? If you're overwhelmed, if you're actually kind of upset of the taxes that you owe this year, it's actually good news, because it's basically a sign that you're ready to move on. Okay, so I welcome that news, right? Just be open-minded. Just kind of it's very simple, right? You probably don't know, you may not even have to change your business completely. It's just a mindset shift from just kind of procrastinating and just being proactive during the year, right? It's very simple. right? At the end of the day, that's basically comes down to those basic things, right? It's a structure, it's timing, it's strategizing, it's calculating, it's doing projections, it's getting yourself organized, right? If you're in a situation where you're just procrastinating, if you're waiting till the last minute, but you feel like there is another way to do this, your instinct is talking to you, because there is another way. There are plenty of things that you could do, but if you can get something out of this video, is that you shift from thinking that taxes is once a year event. Is that just one thing that box I need to check off, and just gonna get the government off of me, and just pay whatever I need to pay, just hand it everything else to a tax preparer or a CPA to just come back with some numbers that I have no idea about, or shifting that to just kind of grabbing the balls by the horn and taking control of your situation, right? Doing proactive planning, right? Meeting with your CPA quarterly, every 6 months, right? At least once a year, mid-year, before the year ends, at at the bare minimum. Okay, so those are the type of things that you could do, and I guarantee you that worst case, you're not able to implement some things. At least that's gonna give you the peace of mind that you are doing the steps correctly. It's gonna kind of put you in a mindset where you know where your business is, and it puts you in a situation where you know where you're at, and what you can do in the future to help yourself, right? Because you may show up at a moment where some of those strategies are gone, but you can always plan ahead, right? There's always next year, right? And there's some strategies that you can even go backwards so many years, right? And that is also available to you, and that's another reason why you want to meet with your CPA to go over all this stuff. So, I hope this video was helpful to you. I hope I am doing anything. If there's anything that I can get you from this, is that this is not difficult. This is not rocket science. It's just a matter of doing some shifting in the way that you are doing things. Hopefully you already are, and you can just kind of just take advantage of this, right? Keep going, because the other alternative, it's much worse. So if you like this video, please hit that like button, follow us. We're always showing content like this. We like to educate our clients, and we like to promote some of these ideas that we work here at Upfront CPA. Thanks again, folks, and we see you soon.